Hello, this is Brian Belski, Chief Investment Strategist at BMO Capital Markets. We believe Canadian stocks will post their fourth consecutive year of positive returns in 2022, albeit less positive, but that is very okay and very normal. Our models show that the TSX index in Canada will attain a price objective of $24,000 on earnings of $1,500. While these returns are certainly more reserved relative to the average return the past 4 years, positive is still positive. To clarify even further, we believe this less positive trend does not apply only to price performance, but also to slowing earnings growth and diminished valuations, not to mention a slowing trajectory of rising interest rates. And yes, the strong possibility of decelerating inflation, especially during the second half of 2022. Simply stated, steady earnings growth, still excessively low interest rates, declining valuations, and eventually subdued inflation are a very good backdrop for Canadian equities. Remember, equities are traditionally the best inflation hedge, and yes, stocks can, will, and should go up alongside interest rates. After all, rising bond yields mean the economy is improving, which the stock market has already been telling us thanks to its powerful rally the past few years in particular. In terms of positioning, over the next 12 to 18 months, we are advising clients in Canada to overweight the following in their equity portfolios: financials, discretionary, industrials, and materials, while neutralizing energy positions after an outstanding 2021. However, clients are encouraged to differentiate these sector positions by increasing their focus on quality, growth at a reasonable price, and dividend growth across all size, styles, and sectors. To be clear, society has been nothing less than tumultuous the past few years. However, the stock market and investing in general has been exciting to say the least for equities. But as markets, let alone society itself, begin to normalize and moderate over the next few years as the great unwind of the COVID-19 pandemic ensues, we continue to focus on the positive because, after all, positive is still positive.